is another day in the neighborhood. I'm Tom Young. We're here to talk about money, financial success, and what does it take? I call it efficient planning, maximizing the relationship of your money to your future. When I talk about efficiency planning, excuse me, efficiency planning is the only pathway to take you to true financial success to the maximum. I'm going to try to share with you a couple of ideas today on why this is so important to understand. Otherwise, you simply end up in the 95% of the people that end up dead or dead broke. I've told that story many times. They followed 100 young people from age 25 to 65. Age 65, they went back and looked them up. One was rich. 4 were doing pretty well. They were okay. 5 were still working because they couldn't afford to quit. 36 have died, and 54 of them were dependent on other means for their daily survival. Church, family, friends, government, welfare, Medicaid, whatever. If you want to end up in that 95%, turn me off. Don't listen to anything else I'm going to say today, because that's where you're headed. I've taken all the courses. I have all these initials after my name. And what I came to realize a number of years ago was the only thing that they were teaching me how to do was to convince you to turn your money over to the financial world. Wall Street, the banks, the government. Oh, yes, the government is involved at the same time. When you put money in 401ks, IRAs, 403bs, 457 government plans, you are now managing the government's future reserves, the taxes that they will collect from you when you go to access your money. It's funny, I still run into some people that tell me, well that's fine, because at retirement, I don't have to pay tax on all that money. And what were you smoking when you come up with that idea, you don't have to pay taxes? Tell me what the tax rates are going to be in the future with $37 trillion of government debt. And they're having trouble refinancing the $7 to $9 trillion they have to refinance in the next 90 days. The interest rates, the feds lowered the interest rates 1/4 point. But it's funny, I got a letter from one of the insurance companies I work with that I write annuities with, and they raised their interest rate. Now, how can that be? The Federal Reserve lowered the interest rate, but yet the marketplace, the interest rates are higher. Well, that's because the U.S. Treasury has to pay higher interest to people to get them to loan the U.S. government money. The banks lower the interest rate, the Fed lowers the interest rate, and that affects the bank. So your CDs are going to earn less. Your savings is going to earn less in the banks. But the interest rate in the marketplace is actually rising because the government is being challenged at finding lenders, people, countries that will loan the U.S. Treasury money. So the interest rate this morning was 4.09, which means it's rising because it was 3.1 a week ago. So it's risen almost a percentage point in the last week or so. So being efficient is really easy to understand. If I did a seminar last night with Mr. Namath, and we were talking about Medicare and all that kind of stuff, but I did a little bit of excerpt with the financial approach for retirees, people that are approaching retirement. And this is evident that a lot of things people are doing wrong, which makes the coffers of the federal government, the banks, and Wall Street richer in the way that we're doing things. And we're only doing them this way because we were told to do them this way by the financial world that has skin in the game. They want all your money, more ongoing, keep forever, give back as little as possible. Those are their 4 rules. So think with me for a minute. If you're close to retirement, or you're 40 or whenever it is, imagine when you first became an adult, you got married maybe, and you needed to buy a car, you borrowed money, you got a mortgage on a house, whatever it is you had to purchase that was a capital purchase. Where did you get the money to buy those things? Well, you went to the bank and they loaned you money and charged you interest. If you look over a lifetime at the interest you pay the banks to use their money because you didn't have the discipline to save money and build up accessible capital that you could use and avoid borrowing, that interest you paid over all those years has an opportunity cost. Because you not only lost the dollar that you paid in interest, but you also lost the interest that dollar would have earned over your entire lifetime. The example that I share people, you're 25, you buy a new car, used car, $25,000. Dad maybe co-signs for you when you get out of school, got your first real job. Payment's $504 a month, and at the end of 60 months, 5 years, you're gonna have paid interest to the bank of $5,400. If that $5,400 were invested at 8% interest over your lifetime, when you get to retirement age 70, that one car that interest would have been worth $250,000, $253,000. You buy another car in 5 years, another car every 5 years, and now that total is $770,000. But you didn't die. You're going to live another 20 years, so that loss continues to compound. And now it's $1.5 to $2 million that you lost because of doing things the way that you thought were the right way to do them. I have a quote for you. One of my mentors in my life. The hardest labor of all labor performed by man is that of thinking. Quote from E.W. Scripps. Let's think a little bit, folks. I offer services to people. I do not charge a fee for what I do. I get paid commissions and referrals from people that find the results that they're looking for in their life by following the prescription, the script that I write out for them. I do not charge a fee. The first meeting with me could be face-to-face. It could be a Zoom meeting. Could be a telephone call. I challenge you to give yourself the opportunity to have a discussion with me so that I can point out maybe some things that would help you become more efficient and increase your future reserves of savings for retirement or capital purchases or whatever the money is needed for. Get my books, 2 free books, The Family Money Farm, The CFO Project, and Financial Mastery Coaching, The Blueprint. Get them both free. Go to cfo-project.com right there. Put in your name and email address. You'll get an email with a link in that email to download both of those books, cover to cover. Take advantage, folks. Don't I know most of you are going to sit there and say, yeah, they're going to turn me off. You stop listening already. But I'm challenging you, if you truly want financial security and some financial success in your life, you must learn the methods that will generate the results that you want. Typical planning, setting a goal, setting a date for retirement. I always have 4 questions. How much money do I have to have when I get there? How much do I have to save? How much interest do I have to earn on that money between now and then so that I will have enough money when I get to that magic date called retirement so that my income will last as long as my life expectancy with adjustments for inflation. What is the date? And then the hard question is, how much will you be willing to lower your lifestyle in order to be able to retire and have enough money to last throughout your life expectancy with adjustments for inflation? That's all I wanted to talk about today. Effective and efficient planning is the answer to real financial success. God bless you all. I will see you again in a couple of days, probably next Wednesday. God bless.